Did you know that in 2008, the entire world almost broke because some adults played house with money they didn't actually have? Millions of people lost their jobs and their life savings, while a tiny group became billionaires. If you stay with me today, you won't just understand what happened. I'm going to give you the exact map so that you, personally, will never, ever run out of money. Let's explain the biggest crisis in history. The Great Trading Card Game, the root of the problem. Imagine that in your school, everyone wants to collect these shiny superhero cards. These cards represent houses. Normally, if you want a card, you need to have saved up your chocolate coins. But suddenly, the school principal, the central bank, says, "Hey, I'm going to lend chocolate coins to everyone and you barely have to pay me back." So everyone rushes to buy cards. Since everyone wants the same ones, the kid selling them says, "Yesterday this cost 1 coin, but since everyone wants it, today it costs 10. Congratulations, you just created a bubble." The bank's trick, subprime mortgages. This is where it gets ugly. The banks wanted to earn even more coins, so they went looking for the kids who never saved, the ones who always lost their toys and didn't have a single chocolate coin to their name. They told them, "Take this toy house. Don't pay me anything now. You can pay me later." Adults call these subprime credits. Basically, lending money to someone you know can't pay it back. The dirty pizza boxes, securitization. The banks knew those kids weren't going to pay, so they performed a magic trick. They took the IOU note from a good kid who actually pays and mixed it with 100 notes from kids who didn't even have a single candy. They stuffed them all into a beautiful box, tied it with a golden ribbon, and slapped a label on it that said, "Pure Gold." Then they sold those boxes to other banks all over the world. It was like selling empty or dirty pizza boxes, but convincing everyone there was a feast inside. The moment everything exploded, one day the kids who had no coins, well, they still had no coins. They couldn't pay. Suddenly, the kid who bought the golden pizza box opened it and saw it was full of trash. He panicked. He tried to sell it, but nobody wanted it. The price of the cards, the houses, crashed. Let's take a quick pause. If you're understanding how the banks tricked us with the pizza boxes, write the word pizza in the comments right now. Why does this keep you poor? The 2008 crisis wasn't just bad luck. It was the result of 3 mistakes you are probably making today. Buying things you can't afford with money you don't have. If you use a credit card for an expensive dinner, you're doing exactly what the banks did in 2008. You're creating your own personal crisis. Following the herd, in 2008, everyone bought houses because prices always go up. Wrong. When everyone is buying something, that's when you should be the most careful, not understanding what you're investing in. If you don't know where the money is coming from, you are the product. How to create real wealth. Lessons from the survivors. While the world was crying, the people who understood economics did the following, and it's what you're going to start doing tomorrow. Have an emergency fund. It's not just chocolate coins, it's your shield. If you have money tucked away, when the world explodes, you stay calm. Buy when everyone else is afraid. In 2008, houses and stocks of valuable companies cost pennies. Those who bought then are now owners of entire buildings. Wealth is created during crises. Invest in assets, not liabilities. An asset puts money into your pocket, like a business or a stock that pays dividends. A liability takes money out of your pocket, like that latest iPhone you bought in installments. Your 10-year action plan. You don't need to be a Wall Street genius. You just need the discipline of a 5-year-old. Don't spend what you don't have. Save a piece of every coin you receive. Learn a skill the world needs. Invest those savings into things that grow over time. The system is designed for you to spend and stay poor. Understanding 2008 is understanding that debt is a trap if you don't know how to use it. The Cantillon effect, why the rich get richer in crises. Imagine the principal prints 1,000 new chocolate coins. Who does he give them to first? He gives them to his friends, the teachers. Because the teachers get the coins first, they run to the cafeteria and buy cakes at the usual price. But by the time those coins reach your hands, after passing through many people, the cafeteria lady has realized there are too many coins in the school and she raises the price of the cakes. You receive the money last, when everything is already more expensive. This is called the Cantillon effect. In every crisis, the government prints money to save the banks. That new money is received first by big investors who buy assets, stocks, gold, buildings, before prices skyrocket. Don't keep all your money under the mattress as cash, because the principal is always printing more, and your coins will be worth less. You must own real assets to stay close to the source of value. Positive asymmetry. How to win big by risking little. Many people think that to get rich, you have to gamble everything. Wrong. The people who survived 2008 and became millionaires used asymmetry. Imagine I offer you a deal. If we flip a coin and it lands on heads, you lose 1 chocolate coin. But if it lands on tails, you win 100 coins. Would you play? Of course. You can fail many times and still end up being the richest kid in class. In business and investing, this means looking for opportunities where the most you can lose is a little, but what you can win is infinite. Poor people risk a lot to win a little, like the lottery or a car loan. The rich do the opposite. They study hard to find deals where the risk is tiny and the reward is giant. The time for money trap. Your most valuable asset. Imagine every kid at recess has a magic box that makes 1 chocolate coin every hour. Some kids just sit and wait for their coin, and as soon as they have it, they eat it. Other kids are smarter. They give their coin to another kid to build them a second box. In 2008, the people who suffered most were those who only had 1 box, their job. If the boss closed the factory, the box stopped working and they went hungry. Here is the secret that will change your mind. Poor people work for money. Rich people make money work for them. If you only use your time to earn money, you have a limit, because the day only has 24 hours. You are selling your life in installments. To create real wealth, you must build machines that work while you sleep. A small online or physical business is a machine. An investment that pays you interest is a machine. Stop asking, how much money will I earn today? Start asking, what money machine will I build today? The lie of security. The risk of risking nothing. Imagine 2 kids. Kid A keeps his chocolate coin in a locked safe because he's terrified of losing it. Kid B uses his coin to buy seeds. He plants them and accepts that some might not grow, but others will turn into trees full of candy. At the end of the year, Kid A still has 1 coin, and it's probably stale. Kid B now has a forest. In 2008, millions thought they had a secure life because they had an office job and a 30-year mortgage. But security is an illusion. True security doesn't come from a boss, it comes from your ability to solve problems. Your new golden rule: the biggest risk of all is taking no risk. If you don't learn, invest, or build, you are leaving your future in the hands of a system that already proved in 2008 that it doesn't care about you. Don't look for a shelter from the storm, learn to build ships. Because when the next crisis hits, and it will, while everyone else is drowning searching for security, you will be sailing toward your next million. The 2008 crisis was a painful lesson, but today you have the advantage. You already know the trick of the pizza boxes. Knowledge is the only asset that no one can take from you and that never creates a bubble. Start building your own castle today, one made of real bricks, not paper debt. I'll see you in the next video.